G'day folks, Jim here from Orchard Forex. It's Saturday the 31st of October. Well, the markets have finished very much on the defensive on Friday, ahead of what's going to be a fairly momentous week for the markets. Stocks and oil both took a hit because of the worsening COVID outlook, which is likely to depress global demand, and comes ahead of the US election on Tuesday, where anxiety is building over the possible result. Worse than expected corporate results from the big FAANG companies did nothing to help the US indices on Friday, with Twitter in particular performing badly. That was down by a massive 21% on the day. The FX markets were choppy and sideways without doing a great deal, but the US dollar is enjoying a safe haven bid for now, as we'll see in a second from the charts. Looking ahead, aside from the election in the States this week, we've got central bank interest rate decisions to come from the RBA on Tuesday, and then both the Bank of England and the Fed on Thursday. And on top of that, we've got the PMIs along with the US employment data, and the non-farm payrolls also on Friday. So without any further ado, we'll go and have a look at the charts. Actually, we'll start with the trend table, because there's some interesting things to see there. So as you can see from this, the most interesting thing to me, it looks like that the dollar index might be turning a little bit higher, suggesting that the dollar is going to continue to enjoy a safe haven bid tone in the coming days. Having said that, the euro doesn't. The euro's giving fairly conflicting results, but dollar Swiss does look a little bit better bid. Once again, though, the signals aren't strong, so we might not see a great deal, particularly ahead of Tuesday, Wednesday, when the election results start to come through. The Aussie looks heavy, but the indicators are pretty neutral, as they are with the Kiwi. And as far as the stock market's concerned, the longer term indicators do seem to be turning lower for the US indices in particular. Although, having said that, they've come down quite a long way in the last couple of days. So we're in an oversold situation, and possibly seeing a little bit of a bounce, but it does appear to be a case of sell the near-term rally. Elsewhere, oil does look heavy still, and that was down 10% on the week, and it looks as though it could have further to run. And on the crosses, the thing I kind of like to look at is the yen crosses. They look very heavy, particularly euro yen and Aussie yen to me look as though they could have further to go on the downside. And Aussie Kiwi also looks a little bit heavy, but I think there are better things to trade than that right now. But having said that, we'll start by going and have a look at the dollar index chart. Okay, so here we have a weekly chart of the dollar index, and as you can see, from the FIBO point of view, we've come all the way down here, perfectly hit the 76.4% reversal of the whole rally from 2018 low. And now we seem to be, the weeklies might be building some positive momentum. Now we've closed above 94, the figure for the first time in quite a while. The closing level actually states that the the dollar index is at 93.88. I think that's an inaccurate number. I think it did finish above 94. This is a spike in the price right on the closing bell. Someone put in a misprice, and it's just marked it down by about 10 points. But anyway, that's fairly immaterial. As I say, the weekly indicators may be moving a little bit higher. And if that's the case, the dailies also look slightly better bid. Let's go to the dailies. So here we can see on the daily charts that while the momentum doesn't, it's not really showing us anything at all, but the indicators may be turning slightly higher. If that's the case, we've got significant resistance right here, sort of 94.30. Got the 100-day moving average, FIBO level, and then up to this high here, which is late September at sort of 94.65. And we really need to get through that in order to gain momentum, which could then take us towards this previous low here, which is at 95.70, and up towards sort of 96. That remains some way off, and I think any squeeze towards the top side will depend on the degree of safe haven demand, which may follow through after the election results. If the election result is very tight, which I guess it will be, and we won't even know the result probably for weeks afterwards, with the postal votes being given up to about 10 days leeway. So it wouldn't surprise me to see the dollar a little bit higher. And but I do think for the time being, this level here, 94 sort of 65, 95 is probably going to be quite tough to break through. On the downside, if we fail here, well, in that case, we're back into this sort of 92, 93 range again, and that remains to be seen. But right now, I'd actually rather be buying dips in the dollar, looking for some progress to the top side. And we'll go and have a look at the euro. Okay, so here we have a 4-hour chart of the euro, and there is minor support down here, so this 116.40, 116 level. This takes us this low here, 116, down to this the 50% pivot bound at 115.90. So that's going to provide some support on the day, on Monday at least. The 4 hourlies are looking a little bit oversold anyway, but the dailies not doing anything really, but possibly beginning to point to the downside. We're sitting right on the 100-day moving average, so that could act as a bit of a magnet on Monday. And it may be that we have to wait till Wednesday when the election results start coming through to see any real movement in the dollar. So for the time being, I'd probably trade 116, 117 as a range without looking for too much on Monday, and the real action to start midweek. If we look at dollar yen, so dollar yen's quite interesting. As you can see from this candle here, this was last Thursday. We did actually make a lower low and a higher high, closing above the previous candle. So that's a bullish reversal sign, really. And dollar yen finished the week on a fairly positive note after having made a bit of a double bottom down here at 104. So it's only at 104.65 at the moment. But things do look reasonably positive for the dollar at the moment. Having said that, if we do see a tight election result, I do think that we could see a renewal of safe haven demand. So rather than play the yen through the dollar, I actually like to be short euro yen or short Aussie yen, and I'll show you charts of that in a minute. So moving forward to the Aussie, that looks particularly heavy, but it is holding above support at 70 at the moment. And the indicators aren't showing a great deal. These are the daily indicators. They're fairly neutral. We're not seeing an awful lot of momentum. Don't forget, we've got the RBA meeting tomorrow on Tuesday, and expectations are for a cut of 15 basis points. But probably more importantly, the market's beginning to look at a quantitative easing program of somewhere between 150 and $250 billion. Now, I think if it's anything less than 150, we could actually even see a spike in the Aussie. If they do nothing at all, we're definitely going to see a spike in the Aussie. Most punters won't be interested at that time, of course, because the Melbourne Cup's going to be on. But I do think if we do see a squeeze to the top side in the Aussie, that's probably a sell. I do think eventually we're going sub 70, but it might take its time. And there's good support down here, the FIBO support at 69.60, below which the 200-day moving average is not until sort of 68 the figure. There's plenty of support before then, though. The 100-week moving average, this blue line, that comes in about 68.90, 69 the figure. And so I do like the downside. I think the weeklies are looking heavy. The RSIs are beginning to point lower, and the stochastics equally look a bit heavy. So selling rallies in the Aussie does seem to be the way to go. Although before the RBA on Tuesday, it could be another day of just chopping around above 70 cents. While we're here, we'll just have a quick look at the crosses, Euro yen and Aussie yen, both of which look pretty heavy to me. And I think if we do see some safe haven demand come through for the yen, which wouldn't surprise me at all, although that probably depends on a lower stock market. But Euro yen finished the week on a pretty soft note, but above the 200-day moving average, and that comes in at around 121, or just above 121. So the daily indicators do hint at lower levels ahead. The weeklies also look a bit heavy, but we are sitting on the 100-week moving average here. But if we do go through that, I suspect we are in for lower levels. So if we need to get through 121, and then we possibly head back down towards 120. And if we go through there, this low here will come into play just above 119. So I would be looking to sell rallies. We're just below 122 at the moment. So looking to sell up towards, say, the 100-day moving average. That's some way off. It's a 123.5. So somewhere above sort of 120 or 122 and 3/4 to 123 with a stop loss above 123.5. I'd be looking to sell there. The dailies, as I say, do look a little bit heavy to me, and so I prefer to be on the short side. Same pretty much applies to Aussie yen. Aussie yen's quite interesting. It's in a bit of a channel at the moment, a downside channel. So the top side for that at the moment, if we extrapolate up here, is at 75.5. So that's some way off at the moment, where it's currently trading at sort of 73.5. I think if we got back up here to, well, probably these lows around here, just above 74.25, be looking to sell it there with a stop loss, quite a decent sized stop loss, but above this 75. But the 4-hour charts not suggesting an awful lot at this point in time. So it may be that we just continue this choppy consolidation. The dailies vaguely look as though they are heading or beginning to head lower, but we do have some support here. This 200-day moving average at where's that? Sort of 72.70 or so, and below there we've got 72.10 is currently the base of the channel, which comes in just ahead of 71.30. That's the 38.2% FIBO retracement. I do prefer the downside, as I say. I think Aussie's heavy, and I can't really. The dollar yen may see a bit further of a bounce because of a stronger dollar, but overall I think the cross is still headed lower, and we're seeing a series of lower lows, lower highs. So I think we just go with that trend and look for further ratcheting to the downside. The weekly charts, while we're here, they look a bit heavy as well. So as I say, selling rallies. We've got if I blow this up, we've got the the 100-week moving average, which is the blue line here. That's at 74.60. So I doubt we're going back up there. But if we do, yes, keep a stop loss above that 75 level that I suggested earlier. Just quickly on the Kiwi, that's sitting just above the 100-day moving average, which is around 66 cents. And we've also got trend support here, which comes in at around that 65.50 level. A break of that would see a move lower towards 65 cents, 64.80, something like that. And we've got the weekly charts showing that the Kiwi actually, let me just blow this up a bit. The Kiwi is sitting between, it's been trading now for quite a while, between the 100-week moving average on the base at 65.20 and on the top side at sort of 67.60. For the time being, I think we're probably going to continue to do so, although in the near term, as I say, because I think the US dollar could remain bid, the downside potential for the Kiwi is towards this sort of 65 cent level. Now moving along to the stock markets. So starting with the S&P, that had another down day on Friday. The index itself finished about 1.2% lower, but the futures market towards the end of Friday, which carry on an hour after the market actually closes, they kind of rallied a little bit. So the futures market were pretty much unchanged on the day. Now the 4-hour charts are looking slightly positive. We have come down quite a long way over the last few days, so the 4-hour charts have got themselves into an oversold situation. The dailies are not doing an awful lot, but they're possibly pointing a little bit lower. But if we go further out, the weeklies are beginning to look pretty heavy to me, and the monthlies as well. Let me blow up the monthlies a bit. We've got quite a substantial bearish divergence in the monthlies, so I'm a little bit cautious about the next week or two, and I think potentially the downside is the way to go. If that's to be the case, the next support level below this level here, sort of 32.20, we get decent support coming in at below 31.90 is the previous low, and then below there we have to look at the daily charts. So having the 100-day moving average here, 3,300, the 23% is at 32.40, and then we start to move a bit lower, 31.90, and the 200-day moving average down at 31.20. As I say, the daily charts do look a little bit heavy, so I prefer to sell rallies and look for a break of this FIBO support and these previous lows, possibly heading back towards the 200-day moving average, but an awful lot depends on the outcome of the election. But technically, that's the way it looks at the moment. I also checked the Aussie out, the Aussie market. Let's have a quick look at that. Obviously, the Aussie has not performed as well as the US indices in the last couple of months or couple of years, I guess. But and I don't think if these US stock markets do come lower, I don't think the Aussie market will be quite as badly affected. But it does look heavy. The short-term indicators are suggesting a bit more of a squeeze to the top side. We had this late to move higher on Friday, so we could see a little bit more of a move, as the trends table suggested earlier. The 4-hour charts equally look slightly basish, but the dailies, if anything, look a little bit heavy. We're sitting right on the 200-day moving average. If we go through this sort of 5900 level, then there's not really an awful lot down until this sort of 57 level, I think, 57.50. So that remains to be seen. It's going to be choppy, but once again, I think I prefer to sell rallies and trade it from the short side. We'll take a quick look at the commodities, and this is a gold chart. Now, gold got sold off quite heavily during the middle of last week, and it's kind of recovered, sitting at 1880. And the short-term 4-hour charts look vaguely supportive. And in the longer term, I can't really see any particular reason to be short gold here. If times get tough and safe haven demand's required, you've got to think that gold's probably not a bad buy down at these kind of levels towards 1850. Below there, I guess I'm wrong, but I kind of prefer to be looking to buy gold in the near term. Having said that, if we go further out to the weeklies, as you can see, they're still correcting quite dramatically from the high above 2000. But we've been in this sideways choppy range now for quite some time. The dailies are not actually showing us a great deal. If anything, they're pointing a little bit lower. But I'd still be looking for levels to buy gold. But I would keep stop losses fairly tight, because, as I say, the weeklies could just continue to carry on lower. But with all the uncertainty around, I think probably trading gold from the long side in the long term is probably the way to go. And we just take a quick look at oil. So oil fell 10% last week and has closed really right on this major support level, as you can see here. It's the 50% pivot of the whole move down. It's the 200-day moving average, and we've got this kind of pivotal support resistance line going back to the beginning of the year, I guess. So right now, I think with COVID and the concerns about diminishing demand, the way seems open to the downside, and we've closed at 35.70. And looking at the 4-hour chart, we've been down to this 34.90 level last week, so that's going to provide some support. Now, the 4-hour charts are slightly oversold. I'd be looking to sell rallies towards sort of 36, 37 area, I think. But much above this 37 level, I think I'd probably be out. But I do prefer the downside. As I say, the dailies look a little bit heavy, and the fundamentals aren't good either. As far as the weekly's concerned, they're pretty flat. So it could well be that there's just better things to trade than oil at the moment. But if anything, I think we might be headed towards sort of $35, maybe $34 a barrel over the next few days. And also a lot, once again, depends on the outcome of the election. So that's about it as far as the charts go. And we'll just take a quick look at the calendar. As you can see, daylight saving ends in the States this weekend. So the markets won't open till an hour later, 9 a.m. Australian Eastern Standard Time. And as far as the week builds up, well, we've got the PMIs will be the main focus on Monday, the manufacturing PMIs, that is, and the ISM out of the States. Tuesday, the main event will be the RBA decision. And as I said earlier, we're looking for a 15 basis point cut in the cash rate, and the possibility of a quantitative easing program being implemented by the RBA. The presidential election obviously is the main event on Tuesday. Looking ahead to Wednesday, that's when we'll start seeing the results come through for that. But in amongst all that, and before that, we got New Zealand unemployment, the BOJ minutes, the previous last week's meeting, Aussie retail sales. We've got the services and composite PMIs, the ADP private US employment report. This is all on Wednesday, and then the ISM services. Looking ahead to Thursday, the Aussie trade balance. The main events will be the Bank of England interest rate decision, which will be closely followed by the Fed announcement, the FOMC meeting. And then we've got the Friday. We've got the monetary policy statement from the RBA, and that'll probably just follow up what they say on Tuesday. And then late in the day, on Friday we've got the US unemployment data, and finally on Saturday, when the markets are actually closed, we've got the China trade balance. So that'll have an effect on what the opening on Monday. So that's about it for now. It's going to be a hectic week, so keep stop losses well in place, and we'll talk to you. I might do a video during the week as events unfold. So we'll talk to you then. Cheers.